Hi and welcome to this week's Big Picture. This is Kim Watson speaking on Tuesday 26th of November. So really the principle behind this is to look at the week ahead. Now this can be the 7-day week, not necessarily just this week, running it through to next week into Tuesday. But all I'm trying to do is take a summary of what's going on. I'm looking at fundamentals because at the end of the day they affect what the big banks will do. So we've got to look at the fundamentals from that point of view. We will also see, as a reaction, we'll may see what the bigger traders are doing, and now that comes as part and part. They'll be looking at the fundamentals, but they'll then be second guessing what the big banks are doing. So that the information I'm looking at here really is the fundamentals. I'll talk about anything that's coming out big bank wise as we run through, and then looking at big traders. Some of these fundamentals obviously, and the best data is the data that's actually measuring what's actually happening, but of course we've got other aspects that are affecting us at the moment, including the tariff situation, the US, China, US, everyone else. It seems to be going on. So we've got the tariffs going on. We've then got aside in Europe, we've got all sorts going through here mix. We've got a new ECB president to take into account. In the UK, we've got a general election in swing. So there's plenty of other factors that sort of to the side of the fundamentals. If we were looking at the fundamentals just purely on a business basis in terms of the numbers, we could do that, but we need to take into account some of these effectors which could affect the fundamentals, which then affects what the big banks do, and whatever the big traders are going to be thinking, what the big banks and what's the fundamentals doing. So it's a knock-on effect. So just got a very much big picture, and often you then see this in price action. So now, these guys can be quite lagging, but they're often early rather than late, because they're looking at this themselves. They've got their own analysts. They second guess what the banks are generally doing, and so they'll be starting to make moves early. Right, that's what I'm trying to do here. Let's bring up the sentiment first. Then, in fact, we'll bring up a chart here first. Actually, what I'm going to do here is look at the fundamentals US first. Just scroll these through quickly. This is as of November. Figures to look out for there. Then manufacturing was down, services was significantly up. Significantly more of the economy is service operated these days, so that's quite key there. So the swings and roundabouts. Job front was okay at the beginning there, very low unemployment rate still. Good jobs produced. Started there in October. For the month before. Then you're looking at inflation. Inflation's picking up a little bit. Core inflation not so much, but headline inflation there. We've got or had producers inflation. This inflation, when this starts picking up, can run through and become a sort of the leading indicator for consumer price index, but sometimes it can just be absorbed by the producers, in which case it means smaller profits and can affect the equity markets. Retail sales towards the end of midweek there, core figures down a little bit. Headline figure higher than expected. Not interested in the housing stuff at the moment. Flash manufacturing came out better. The fully fed manufacturing data come out better as well there. We've got a week ahead leading into the end of this month, and there's not much in the way of key data, and of course we've got a bank holiday coming up this Thursday, and of course Friday is quite Black Friday. Talking Black Friday, I should come into that in a minute, but Black Friday Of course, these 2 days can be quiet in the markets, and well, may not see too much happening, but things seem to change these days, and we see a little bit more. But talking of Black Friday, we've got Black Friday sale on, so if you're interested in any of our courses there, the Easy Day Trading course, the Swing Trading, DST Swing Strategy, and the Inflection Point Strategy and course that goes with that, they're all there. You can read much more from our website there, Black Friday sale. There we go, through a beautiful link, I'd say. Moving on sharply then, so we've looked at the fundamentals, and moving into the so what the big banks doing, the banking sector, or central bank there. Every conversation I've seen since that time is suggesting that they'll just leave the rates untouched for quite some time now. That's certainly the way things are shaping up. Beyond that, then, that's the central banks leaving things alone. No cuts or increases planned as of yet. What's beyond that? Well, let's look at what the big money's doing. Well, the big money's slipped a little bit out over the. If you look at the asset money there, let's just take this leveraged off for a second so you can see it a little clearer what's happening there. It's been coming off since when it peaked in October there. And when the dollar index last peaked, it's been coming off. It's picked up a little bit, marginally, last week or so, but it has come off a little bit. Asset money, the leverage money, has been a little bit more bullish, a bit longer, although that's dropped back a bit there too. Now, one thing I'd say is there's not masses and masses of positions open in terms of the COTS. I say the COTS, but this particular report in the futures, they're not massive positions compared to what we would see in other markets. Quite often the bond markets see more action than this particular market, so it's only a very light guide for the US dollar. Technically, what we're seeing with the US dollar, well, this is the dollar index, which is against a basket of other currencies, so it's looking not just purely at the dollar, I suppose, well, it's purely at the dollar versus a basket of other currencies. What's it been doing last week? It pitched up there, and looks like it's trying to push on further. It's regained or retested its weekly 21 there. Looks like it may be pushing over. Excuse this bit of a messy chart here, but in fact I'm going to take this off there. I was just doing a bit of fib reading. But what have we got here? Well, let's just see if I can do this. And what we've got this sort of wave that's come down there. Then we've had this sort of wave here, which was maybe an ABC correction, and it looked like it might have rolled further at one stage, but we're coming back up now. This is quite a key area because we're testing these prior highs here. A break of that could see obviously the reverse with the pound and the euro. So if we see the dollar index pushing up higher, we'll be seeing the pound, the euro, and some of the other majors there rolling the opposite way. It does seem that the dollar's gain may be with some of the content discussions around tariffs in particular, and we've seen, of course, that reflected in the equity markets as well. But for now, in summary, then I've still got a bit of a bullish bias because of with the tariffs things seems to be there seems to be wanting to agree something there, which is more bullish. The central banks really leaving things flat and got no decisions or no ideas at the moment of cutting rates. So flattish. The COT, well, was dropping off a little bit, flattish, neutralish. Technicals, well, the technicals look sort of bullish, so flat to bullish. It may be that we're just getting in a bit of a status quo, and we end up in a sort of a stagnant area period. As the dollar index has run through now quickly on the euro side of things here. Let's pull in the euro here, and we're going to just do let's do on that one. There we go. Let's switch this over to the eurozone and just look at what's been out this week or this month even, and where we are currently. Apply that filter, and it's mixture, I would say. In fact, there was little out early in the month there. We got ECB president, new ECB president speaking, the first real conversations actually came last week. Where are we sitting here? Well, in terms of overall output, which is what is one of the leading indicators there of what's going on, it's still not great, particularly for the manufacturing data. Look, it's okay, the German figure beat its expectation there, but it's a powerhouse of the European region, and you can see that that had a knock-on effect in terms of the overall manufacturing, which is still in contraction, so suggesting contraction. There's not a lot of positive stuff coming out there at all, nothing really looking brilliant. In terms of what the big money's doing then, I should say, what's the central banks doing? The central banks well, there is Lafarge's her principles are get the countries to start spending a little bit more, as opposed to financial stimulus, instead of this trying to cut interest rates any more negative, because they're obviously not doing the trick. Oh, hurrah, someone's woken up to it. What's happening with the big money? Well, over the last couple of weeks, and I'd say it's over the last couple of weeks, we've seen the asset money dropping off a little bit there. Leverage money reducing their short positions. You see, this zero line just shows these are positive, these are negative positions, effectively net. This is their net position. Overall, it's slightly net positive still, and it has been all the way through whatever Eurozone's been doing for a long time. So it's remained that way. It got less positive way back. But for some time now, we've seen in October we've seen that sort of more positive move coming through there, and it really sits, I should imagine, about a balancing principle. But either way, that's where we're sitting there, erring on a more negative point. Technically, let's go into the weeklies, and well, we can see from here that we've got lower highs coming through, lower lows coming through on this weekly. So the big picture here is still bearish. There's nothing really to change anything in that respect yet. From a daily point of view, if we switch this into a daily chart, and well, what we've got here, well, we had a lower high come through there, so there's the lower highs in things. We haven't come down to the same sort of levels that we've seen. Effectively, if you inverted this with the dollar index, it hasn't really, the euro's just held up that little bit more. It's just consolidating as it sits, and we're looking at this yesterday doji bar. Question really is from here, is it going to roll over? You sort of look at this picture and you think, well, it's good for a roll, but we'll see. If it does, we could see targets eventually hitting down to this 109 area. Before that, well, we'll see what's happening. It's consolidating around this phase. There are some smaller time sort of points that might be more positive, but overall summary then is leaning towards the downside quite a bit for me on the euro. I'm sort of more negative, not just technically but fundamentally. It's a hard one to be steering or changing course of at the moment. Okay, that's that. The pound. So the pound will, of course, we all know there's the general election over here. We've got Brexit still hanging over as a cloud over the top of things. Looking at the data that's actually come out during this month, let's just show you this bit mixed. There was a much softer approach taken on the central bank there, so the central bank is taking the numbers in, and we had two people sitting there saying the rate should actually be cut, although it's strong enough not to at the moment there. But look at it, this red average earnings index dropped a little bit there. Retail sales down. This is the consumer driven. It's not great from that point of view. GDP just dropped a pip. This is not at all surprising when you've got Brexit hanging over. So I don't think that's quite such a problem in some respect. Well, it is a problem, but we know what's causing the problem. It's fixable potentially. New manufacturing services data that came out together. This is the flash figure, as opposed to we just normally get them in the beginning of the month, and here we've got them thrown at us in the late part of the month, both showing contraction there. Below that 50 area is contraction, so not looking great from that perspective overall, but we know why. And it's something that might be sorted at some point. I'll say be careful. However, what's the big money doing? Well, the big money's been quite positive. You can see from the way the dealer position, which is in black here, how it's been from that from those lows around about the 6th of August. It actually just pitched a little bit lower, but the money, that was the peak of negativity that was sitting in the markets, and then the money just turned its head around a little bit, and it's got more positive. In fact, to the point where we're not too far from crossing the line. What does that do? Well, that just confirms a trend quite often. It might not do it, but if it keeps on pushing, if we see these pushing up here, it could be showing more positiveness to come technically from that sentiment. What we're seeing here, well, the dailies, let's just come to the weeklies, and the weeklies, well, we put the high lows in, etc., and it's consolidating, a bit of a flag pattern arguably still here. It's broken the original trend that was running down here, sitting above that level. We've still got the weekly 200, which might draw price towards it. It struggled a little bit last week. It popped back up again. It's struggling, and again we've got this sort of stagnant effect, and it's no surprise we're sitting there with general election over, and I think this could just continue in this mode, although I'm erring on the more bullish side. If in a couple of weeks time we get a Conservative party re-elected with a majority, we could see that would, even just in the short term, that might say quite a positive aspect on the pound. Of course, that could be quite opposite if the Labour Party get in. Okay, quite disastrous, he says. Completely independent, not. Right, okay, so let's have a look at the situation on the yen. And let's just switch this. Not a lot of data actually comes out on the yen on a monthly basis. It has the least sort of number of reports that coming out. There you go. Nothing of any significance. That summed up pretty well up. Okay, and then so we can't draw too much conclusion from that. Central bank wise, they're just stalling the situation. Is in a tough old spot anyway. So huge lending. No real inflation, and no real tools to do anything with really, apart from spending more money. So we're left then. What's the big money doing? Well, the big money's been moving away from the yen. You can see that it crossed over a few weeks ago. This is the dealer's position. When this crosses positively, that means that both the asset, well, I say both, but more likely the net totals between the asset managers and the leverage money has gone negative, and that's what we can see. That money sort of heading off south. Arguably, and I say arguably, and it may be good reason to, we may have seen a bit of a stall there, because if you're looking purely at asset money, that's slightly increased, but overall. And it may have stalled things here. Maybe just beginning of, well, hold on a minute, we've gone back far enough, we're going to correct. I think there's just a bit of uncertainty sitting here with all money at the moment. So technically, what's happening? Well, this is the weekly picture. To me, it looks like technically with the higher lows in there, it could push up again. It's looking like a bit like the pound with the 200 above. Could be the target to the upside. Choppy elsewhere. It's having these sort of, you're seeing the risk back on, the talks about tariffs agreements being made, etc., and not being put on to goods. If a trade agreement's put on, sorted out, we could see the yen soften further. But until then, it remains quite volatile in terms of switching backwards and forwards. And again, a bit of stagnation there. It's not particularly clear either way. Aussie dollar, I'm not going to go through the fundamentals there, but they have weakened, and we're seeing that right away across the board. I'm going to just talk to a bit more high level here. In fact, to me, the Aussie is one of the weaker pairings at the moment, and you can see this. I guess it's a daily chart, but you can see how weak it's looking. It's barely gaining any uprights. Okay, this is all technicals, but central bank wise, they're suggesting that there could be a cut down to 0.25 at some stage, after which time they'll start quantitative easing, so they'll just change different methods, but they are planning for more monies to be run in there, which suggests further weakness. So that's from the central bank point of view. What's the big money doing? Well, it's been moving, it's been rocking and rolling out. There we go. As you can see here, there we go. Both are heading back south a little bit there. You can look at the overall position. The dealer gets more and more bullish or positive here. The others are getting weaker and weaker. We haven't got to the point of extremes here. I looked back and saw if we'd had to see if we had an extreme. No real extremes here, but there is continued weakness expected with the Aussie dollar there. And technically, if we come back to the weeklies, you can see huge downward trends continuing. From a daily perspective, it's really looking quite bearish. Where to could easily get down towards that 67.31, the monthly S1, gradually. But it's, again, if you notice the pictures, and the euro was of a similar sort of, okay, it's a little bit higher, but you got in not too dissimilar picture here, and it's in the inverted dollar index effectively. This has broken its prior lows here, but it does look weak. Okay, and into the Canadian dollar. Again, not lots of numbers coming out from the Canadian dollar, so I'm not going to run into that point. But what's happened here? Well, the fundamentals are weaker. Central banks have taken a much more dovish approach of recent, and what's the big money doing? Well, that's also taken a much more dovish approach in general. We're seeing the asset managers' positions coming off quite significantly there, dropping down. And you can see that, as I said, again, just look at the dealer. I sometimes just look at the dealer money, see what's happening there. Well, it looks like it bottomed near somewhere near that, was pretty more recent. That would have been a low. This is inverted. It bottomed down this area here, even. And what's it doing now? Well, we're seeing, as the technicals, we're seeing that this sort of continued push up here. It's still arguably got lower highs, lower lows through this, so it is a bit more of a stagnant move anyway. It's not been fantastic, but we're back to some key levels technically around this 133.30 area. We could find more resistance, but it's been up there so many times you do wonder if it'll get a decent grip through back to towards the 134 area. Okay, that's Canadian dollar. And finally the New Zealand dollar. I'm still erring on the bullish side of this, but it's slow, it's hand railing its 100. Let's get on to the fundamentals. A week ago I mentioned that the bank had surprised everybody, or over a week ago the central bank had surprised everyone, becoming a bit more hawkish. The fundamentals obviously kicked in through that respect and given them some support to do so. What's the big money doing? Well, they're doing something. If we can bring it back in. Where's the big money? Here we go. So what's the big money doing for the New Zealand dollar? Well, it's pitched up a little. Now this was particularly, I said last week we might have seen that sort of big drop there because they're expecting interest rate the previous week it dropped because they expected interest rates to be cut. It wasn't. They took a more hawkish stance. Last Tuesday they reduced their short positions there. Asset managers, leverage money still a bit iffy, but what we can see is the curve it seems to have been put in certainly from the low points. Well, really prior to last week, the previous week's money there, we've already sort of hit this low, which was agreed with this sort of price action, which suggests that we could This is low here. Could be seeing, if they start unwinding some more, we could see the New Zealand dollar pushing up to its weekly 50, daily 200 there. It's just hanging in there, but again it's a bit stagnant. It's just not really moving anywhere particularly quickly. If it can push through there, see any dollar weakness coming through, well, these markets could really sort of spring up. So that's where we sit. Okay, overall summary then of the strongest to the weakest. I said I'll do this, so I'll do it. Now I haven't put it in a fancy chart, but I'm going to just give you it in terms of the strongest. US dollar, it wins on three rounds at the moment. Would you believe it? The GDP, the pound, it's second place at the moment. What's happened is that huge move up on it is helped it, and the figures aren't that bad. New Zealand dollar, would you believe it? Third place. This was right down the league a while back, but we're seeing money, and it's got a sort of an upward move there. It's got the potential. Yen as a sitting in the corner there, followed by CAD, and then believe it or not, the euro, and then the Aussie dollar. Sorry, it's running off the side there. So that's how I'd see the currencies in terms of strength. So the Aussie dollar being one of the weaker ones. You could be playing these crosses against the Aussie dollar quite nicely. It's been consistently slow and downward as has the Aussie dollar, technically against the US dollar. So where there's a bit of opportunity in some of these currencies have been pushing upwards, there may be some good moves to be had on some of these crosses. Okay, that's it. Have a great week. I'll be back next week. Bye for now.